Hey guys, what's going on? Welcome into the video. So as this year comes to a close, we're going to be talking about two of the mega cap stocks that arguably have the highest upside for 2023 and beyond. So with these, we're going to be going over technical and fundamental analysis, along with the upside catalysts to watch out for in the future. And I was originally going to do this video on 5 stocks with huge upside for 2023 and beyond. This video was looking like it's going to be 20 minutes plus. So we're going to save those next 3 for next week's video. Those will be smaller to mid cap stocks. So make sure to stay tuned for that, and let's go ahead and get on into it. Alright, so first up is Amazon stock, ticker symbol AMZN. So this stock has had a very rough year and is currently down about 50% year to date. Out of all of the big tech stocks, only Meta has had a worse 2022. Now stocks don't go down for no reason, of course, so we have to ask ourselves, why is Amazon underperforming the market so much this year? So number one is pretty much all analysts expected the massive COVID boost in e-commerce to turn into the new normal, if you will. It would have been expected to maybe go sideways or up at a much slower rate, but we've seen a pretty rapid decline this year as it trends back towards the long-term bell curve trend. Now personally, I don't think this is a thing to worry about for investors in Amazon or other e-commerce companies. There is no doubt that e-commerce will continue to take market share over time. At the end of the day though, analysts were wrong about the short-term e-commerce trend, and the stock has corrected itself and probably even overcorrected itself because of this. Secondly, Amazon is just a company that will naturally just get hit hard during economic downturns. Consumers spend less on goods, companies spend less on the cloud, ad rates go down, and etc. And thirdly, Amazon's management has done a terrible job weathering the storm this year. Jeff Bezos stepped down as CEO on July 5th of 2021, and since Andy Jassy took over as the CEO, it has all gone downhill from there. The stock topped about a week after Jassy took over, where I pointed that arrow at on the chart, and has not looked back since. There have been major mistakes from this management team in 2022. They overhired, built too many warehouses, and overspent on a bunch of new projects. So now they've corrected some of these mistakes through layoffs and closings of warehouses and more, but damage was certainly done and reflected well into the stock price. Zooming out though, Amazon is a prime spot for years to come, no pun intended there. AWS is the clear leader in cloud infrastructure, owning 34% of the market, which is massive. The cloud market has huge growth in years to come, and is pretty much a perfect business model. It is super sticky, so companies who adopt AWS will stay with it, and the more these companies grow, the more they spend on the cloud, and the more that Amazon makes. It's also a very high margin business. Some of the companies that use AWS include Netflix, Facebook, ESPN, Adobe, and more. I saw this post on Twitter and it's pretty interesting about AWS. This person talked with a large health system that uses AWS, and the company's goal was to reduce cloud spend during this economic downturn. They talked with Amazon representatives to reduce costs any way that they could, and the end result was cloud spend up 18% overall because of more shifting workloads. Notes like this just show how powerful the cloud business model is and the growth opportunity for years to come for AWS, as it will grow revenue and profit along with the companies that use AWS. Morgan Stanley put out a research report on Amazon and did a sum of the parts analysis. They came up with a total value of $1.4 trillion, and in comparison, Amazon currently trades for a market cap around $830 billion. Morgan Stanley believes that AWS should be worth $717 billion itself. They believe the advertising business should be worth $121 billion, the subscription business such as Prime worth $220 billion, the 3P business worth $263 billion, and the 1P business worth $116 billion. And for those who are unfamiliar with this, 3P is third-party sellers on Amazon, which is higher margin, and 1P is first-party, aka Amazon selling their own products, which is a much lower margin business, so that's why it would be worth less overall to the company. A big argument that I see against Amazon is that it trades for expensive price-to-earnings multiples. So currently it trades for a 74 trailing PE and a 40 forward PE. The fact is though, Amazon is not a stock that you can really value with these multiples. The company reinvests a ton back into itself and does not optimize for profit, it optimizes for growth. I can't find the research note that I recently read, but it was talking about how Amazon could be making around $50 billion per year in cash flow if they were optimizing for profits. which if so, it would be trading for well under a 20 price to earnings multiple. Instead though, they're constantly reinvesting in their core business, along with side projects such as Zoox's self-driving cars. They're entering the satellite internet business, they're building out a bunch of those no-touch grocery stores, and more. It's arguable that this is the best move for the business currently, but this model has certainly worked very well for the company, being one of the best performing stocks in the past decade plus. Alright, so now taking a quick look at the technicals. This is a very ugly chart, and will take time to repair this damage, no doubt about that. As nice as it would be, it's not going to see a snapback rally and bottom immediately from around here. To form a true bottom, it's likely going to build out some type of base, maybe undercut and reclaim a major support, which could be COVID lows at $81.30 per share, and then can start the trend back up. In all likelihood, this stock and the market as a whole gets worse before it gets better though, and there is definitely no need to rush in to buy it until technicals improve, but fundamental wise, Amazon is looking like a great investment for years to come in my opinion. Alright, so now let's get into Tesla stock, which has had quite the fall from grace recently. It's currently down about 65% year to date, and about 38% down in just the last month. Along with this is certainly the most polarizing stock in the stock market. Bears were in denial during its massive run-up from 2019 to the end of 2021, and bulls have been in denial during this huge drop this year. I've always been pretty neutral on Tesla stock personally. I traded a lot of the big run-up in 2020 and 21, but I've never been a long-term holder of the stock. I think it's pretty easy to see both the bull and bear thesis, which we'll be going over, but the big question is, has the majority of risks been priced into the current valuation, or could there be more pain to come? Obviously, the valuation got way out of hand when it was near highs, but at current levels, it's certainly starting to look attractive here and has priced in a lot of the potential risks in my opinion. So let's go over the biggest risks to Tesla so we can make the best opinion on whether the stock is overall attractive here or whether we think there will be more pain to come for Tesla. So number one is competition risk. This chart lays out how dominant Tesla is in the EV market in the US, and to keep it simple though, it will not stay near this dominant. As these other companies start ramping up EV production, this gap will start to close. But while Tesla won't keep this market share, the EV market as a whole has rapid growth ahead of it, as analysts believe the market will grow at a continuous average growth rate of around 25% per year up until 2028. The major issue though is even tougher competition from China, specifically from BYD. Tesla has recently discounted its prices in China and slowing production, and at the same time BYD has actually raised prices on their less expensive models, which is certainly not a good look for Tesla demand and shows that BYD cars may be more in demand for the Chinese consumer. Also, the average price for a used Tesla is dropping like a rock, recently down 17% from its July peak, versus the overall used car market just down 4%. Last week as well, Tesla doubled a US price cut down to $7,500 for Model Ys and Model 3s delivered this year. So Tesla is clearly experiencing a demand issue, which could be attributed to the increasing competition, the economic environment right now, and Elon potentially damaging the brand through all of the Twitter drama. The man has certainly made his political views transparent and has pissed off Democrats. For example, there are articles like this out with customers saying they bought Tesla to help out with the environment and are now embarrassed because of the brand image Elon has been putting on it. Democrats are obviously big supporters of EVs, so Elon is damaging a large target audience for the brand. Can that be repaired? That is for sure a big question moving forward. And finally, there's a very slim chance that Tesla hits the 2023 numbers they're projecting and analysts are projecting. Currently, the estimates are $5.38 in 2023 earnings per share and about $114 billion in revenue, which would be 37% growth year over year. And look, if they were to hit these numbers, the stock is an absolute no-brainer buy at these prices. It would come out to be around a 22 forward price to earnings ratio, which is stupid cheap for the growth along with it. But what the market is saying here is that there's no chance that Tesla will get to these numbers. They're going to have to be lowered big time from analysts, and 2023 will likely be an ugly year for the car manufacturer. Alright, so now that we've gone over the risks, let's talk about the bull case and upside catalysts. So Dan Ives from Weedbush put together a great list of the top 10 actions that Elon and Tesla need to do in 2023 to get the stock back on track. Let's take a look at this. So number one, he says that Elon needs to name a CEO of Twitter by the end of January. If Elon steps down as the CEO of Twitter, I think that would be a big boost to Tesla stock for sure. Number two, he says Elon needs to stop selling stock. He has said that he will stop. We will see if he holds true to that. As we know, he's lied about that before. Number 3, he says they need to lay out conservative 2023 delivery and targets given the darker macro environment. The 50% growth target is certainly not happening, with 35% plus delivery growth a more realistic goal for 2023. In my opinion, it needs to be even lower than that, personally. Number 4, he says focus attention back on Tesla, get away from Twitter. Number 5, announce Cybertruck deliveries. Along with this, certainly ramp up that semi-production as well, in my opinion. Number 6, he says the board of directors need some improvement. Number 7, he says he wants Tesla to buy back stock. They currently have over $20 billion of cash on hand. They could definitely do some great things with that cash if they buy back stock with it. Number 8, he wants more financial metrics and transparency around the margin structure at Tesla. Number 9, he wants the political talk to go down from Elon on Twitter. And number 10, lay out the strategic plan for Twitter. Once again, just all these Twitter issues. Elon needs to get as far away from that as possible if he wants to help Tesla stock improve, in my opinion. And for Tesla, the company itself, they have developed the most efficient production process, which includes profit margins that blow the other car manufacturers out of the water. Also, some other upside opportunity catalyst is self-driving is still a ways out, but obviously tons of upside there when and if they can roll it out fully. There's also a lot of upside with their solar section of the business and industry that's only going to grow a ton from here. The humanoid robots could be massive in the future. It's more of a call option, if you will. It could easily not be a success, or another company executes that business model better, but Tesla probably has the best chance of doing so with all the data they have, and there's tons of predictions out there for how large a business like that could turn out to be in the future. We will see if it plays out to be a success, but certainly it's a high upside opportunity for the company. Now, taking a quick look at the technicals, this is a setup that we've talked a lot about over the past few months as this textbook head and shoulders topping pattern was developing. Once it broke below that trendline support, it was lights out for the stock and dropped about 50% in a span of 2 months. So zooming into the daily chart, let's talk about what could play out next. So currently it's in the relief balance phase as it was extreme oversold on all indicators. This will most likely result in a lower high before some more downside, which could either result in a higher low or a washout to new lows. Overall though, this is a falling knife and certainly not a bottoming pattern yet. To form a real bottom, we will need to see it build a base first, like we talked about with Amazon, and potentially see another washout to the downside. We can see something like this where it washes out below the $100 psychological level before recovering back above to start a bottoming base of sorts. If things get really ugly though, there are also 3 gaps to fill below, which are shown with the dotted lines on my chart, which is at 94.75, 82, and 75.65. So those are the 2 mega cap stocks that potentially have the most upside for 2023 and beyond, in my opinion. I also think you could throw Meta in that conversation. Let me know your thoughts below on these 2 stocks. I know there will be a lot of differing opinions on Tesla stock, of course. Hope you all enjoyed and hope I provided some value to you. If so, make sure to hit that like button and subscribe button. It helps me out a lot. I would greatly appreciate it. For anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts, nightly watch lists, and more. And thank you all for watching. I will catch you guys next week. Let's have a great 2023, and I will catch you next time. Peace out.